To the next management, and that is CG Power. The company's reported a good set of Q4 numbers. The company's revenues have gone up by 25%. The EBITDA margins have expanded by 100 basis points to 13.5%. Profits ahead of estimates at 32.5%. And the order book has surged more than 60%. Amar Kaul, Group CEO, MD of the company, is now joining in. Thank you very much, sir, for joining in. Rima here. It's the power systems which is driving growth for you in Q4, solid, near 50% top-line growth. Now, given the order book and the visibility on the power side, what can you guide for the company's overall revenue growth next year? What are you gunning for? And in that, the contribution of power.
Thank you. Thanks, Rima, for having me here. Yes, I think the team did a good job in terms of the performance. And for your specific question on power, we are pretty positive about the way industry is growing, sustainability, focus, and also the power grid transmission that is happening, modernization of the grids. I think all that is building into the demand further, and we are pretty bullish on that as well.
Can you help with some numbers? And even margins expanded for the power systems business. EBIT margins hit 23.8% in Q4. Is that the new base? Can you sustain given the raw material volatility? So margins and even some indication of the growth pipeline on power.
Yeah, so it's a combination of multiple things. I think there's no one size that fits all. I think not everything came from the customers. It's also our foundational execution excellence that we have been practicing for last more than 2 years. Keep compressing the lead times, eliminate the waste from the system, make sure your demand and supply side is balanced on SIO processes, have that right forecasting. So there are multiple things. I can talk for 2 hours, what are the things we are doing that's actually showing those. So what you see is actually the outcome. But there's a lot of hard work which the team has been doing over the years on that. So we're pretty positive. Again, we are not giving any forecast on how the margins will look like. But yes, we always look at accretive margin growth. So which means when the top line goes up, the margins will also go up.
Yeah. Mr. Kaul, hi, morning. And we're talking to you on a day where it's very possible that the stock hits a new all-time high. I think it last hit a high of 874 back in October of 24, and we're about $15 away. So it's done phenomenally well from the lows, recent lows. So there is power which is growing gangbusters, but industrial systems is kind of looking is on the other end, right? Some 12-13% kind of growth. So could you tell us what's happening there? Is it demand-related issues and between motors, railways, what exactly is going on?
Sure, I think good question, Prashant. Thanks to talk to you again. Yes, power, I think, because the market is on our side, which, because of the expansion, you know it pretty well. Industrial is not as great as the power sector, but it does not mean that 5 to 6% growth that we see on this industrial side. We are very close to those numbers. But having said that, what are we working on? If you remember last couple of quarters that I have been talking in earnings call or interaction with you guys, there's a lot of work which has gone into the motors piece of business. And I'm very happy to see the large portion of the motors, which is LT motors, it's kind of bounced back. It has reached the respectable double-digit margin that I was looking for. Again, that's not the end of it. There's a very clear roadmap over the next couple of quarters. How do we keep inching upwards on that? So I'm pretty much comfortable on the LT motor piece. Then we have the large motor piece of the business, which right now is undergoing that transition. Will take, I would say, 3 to 6 months more to bounce back on that as well. Our go-to-market strategy on that is activating not only in India, for outside India as well. NPD pipeline for R&D is also getting activated. So these are a couple of things that will help us to be at least 2x to 3x of the GDP growth in that particular market. So that takes care of one of the big piece of the industrial segment. Second piece is the railways business. That's going to take a couple of quarters more. We had recently leadership changes. We have very, very strong professionals who are running this piece. We activated a lot of NPDs on that, a lot of go-to-market. In fact, a couple of my guys right now are sitting in outside India, doing that business development and developing those accounts as well. So it's not only for Indian Railways, but we are looking at markets outside India as well. So I'm pretty bullish on that product as well. But obviously, you will not get results over the next few months. It will take a bit of more time.
And margins here, segment margins, would generally, because input prices are going up, cost pass through perhaps a bit of a challenge here, or not?
I would say we have been able to mitigate that to a large extent. Like I mentioned last time, in the last 12 months, we have increased motors pricing almost by 17.5%. And a lot of it was realization. It's not that we passed the pricing and then gave the discounts. No, I think we're able to realize that. And that's why you see decent improvement in the margin. Again, we don't give each business-wise margin, but I mentioned that, it's already bounced back to double-digit margins. That's the result of balancing what you get from the market and also what you're doing from the productivity point of view.
Got that. Mr. Kaul, just to go back to power, where are we in the ordering cycle? You think a lot of the ordering, I mean, we are halfway past, or we are in this cycle, in this current cycle, where do you think we are?
I think the simple answer is, Prashant, that we have just started. It's the beginning of it. And if you see the jump of our order backlog is jumped by almost 60%, our bookings went up by 30%, and the way I look at the pipeline is phenomenal, huge, and that's why you see a lot of focus on our capacity expansions to address all of those things. Today, honestly, the orders, that's not a big problem. It's a big issue is how quickly can we get our capacities in place.
Yeah.
The technology piece of, because we being a large Indian organization, we are blessed to have all the technologies available, but I think our team is doing a fantastic job to build those in-house technologies to compete with the best in the world.
Yeah. And this is all domestic ordering, right? What you're saying, just at the beginning of it.
No. It's a combination of all. If you look at even exports, we don't give specific numbers, but just to give you an idea, for full year 26, financial year 26, we were 200% up on export orders. Okay. And for Q4 itself, we were almost 7.5 times more than Q4 of previous year. So there's a big focus on exports and domestic as well. So it's a combination of both.
So you've expanded capacity in terms of other action, corporate action, in terms of looking for acquisitions, because as you say, execution is the issue. Are you scouting for opportunities? I mean,
yes, I think we have this strategy team. We continue works on that. We will not be shy of that. If there's a potential opportunity that makes sense for us, we'll definitely go towards that as well. But I think what is in our control very quickly is accelerating the capacity expansion and probably just wait for a quarter more. What we are looking at, typically, the kind of product we have, it takes close to 2 years, 24 months to set up a new factory. And we are seeing how do we compress it from 12 to 14 months. So those are the things, on lean manufacturing basis, what we are working on. And that itself gives you 1 year leverage of being ahead of the curve.
And on the OSAT semiconductor piece, I mean, things progressing well. Can you give us an update?
Yeah, OSAT, as I mentioned last time, our G1, which is the mini plant, making about 500,000 chips a day, that's already operational. And just waiting for some customer approvals. I think next 1 to 2 quarters, we should be done with that. So it'll start producing as per the specs of the customer. And G2, which is the mega plant, which is about 14.5 million chips a day, that is going as per the plan. So between December to March is the time frame of this year that it'll be ready for production, and then give it about 2 to 3 quarters more, because that's the time it takes for customer approval and testing, etc. So sometime in 27 and or something, we should be ready with both of these opportunities on the OSAT piece.
So somewhere halfway FY28, this will be completely up and running.
Yeah. So that, and then there's a gradual ramp up that is as per the plan. But the good news is I think the team is doing a fantastic job. So that in terms of the timeline, etc., we are exactly on that.
Okay, Mr. Kaul, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Thank you for that commentary. As I said, CG Power is not very far away from a new all-time high. We'll see if that is to be today. 10 points lower, 24,321. We had a bit of a flourish at